If you wonder, is real estate still a good investment option? Let me ask you this question instead. Hypothetically speaking, with 2% inflation rate, 10% gain in the average home price, and 3% prime interest rate by end of 2022, will you still see your investment as a good decision? And a bonus question, what about the vacant home tax in Toronto taking effect on January 1st? Let's review the nitty-gritty in the housing market. The city of Toronto saw a 12% annual average price growth, while the gap between low supply and strong demand is worsened. This resulted in a further reduced average days on market, and it is predictable the price will continue to rise. Before the holidays, semi-detached homes became an outlier in terms of the average price. In the York region, we are still seeing a stronger demand with the price growth going faster than the city. On average, it takes half of the time to sell a home when compared to November 2020. And remember, last year we were already in a seller's market. When looking at each home type, semi-detached home enjoyed the biggest average price increase. What I especially wanted to discuss today is how we should take the inflation into the consideration. Because I understand the one key factor driving people to dump capital into real estate at this moment is the worry of the rising inflation to 4.4% at an 18-year high and money depreciation. Inflation is sometimes caused by an increase in the money supply. While a lot of money had been printed since the pandemic, we had also seen a surge in price of housing, stock, and crypto markets. Combined with low interest rates, there is now a lot of easy money flowing around. Now, since people expect continued inflation, they buy more now to avoid paying a higher price later, which creates demand pull inflation. Homes as durable and less vulnerable assets, of course, become one of the favorites. I still think the issue with toilet paper was a great analogy to housing market, except it was not allowed to raise the price of the toilet paper. So that's why if we only look at the average home prices, we will be blinded to the bigger picture. Instead, it is more accurate to plot the price adjusted by inflation, which basically has taken out of the effect of the increased money supply. One key takeaway from this graph would be it is clear the home prices have been increasing rapidly and is unsustainable. But if you say we are in the era the bubble is worse than we had experienced in early 2017, I would not agree. Maybe we're just as bad? But then what happened in 2017 was the introduction of the non-resident speculation tax in Ontario, which is 15% of the purchase price, resulting in a sudden decrease in demand, which eventually led to a price adjustment. It looks like in 2022 there will be the vacant home tax in Toronto, which is 1% of the market value, and owners will not need to pay until 2023. Thus, does not seem to be that much of a big deal. In order to give you further recommendations with your investment plans, perhaps we all should consider the following numbers. First, the Bank of Canada is targeting 2% inflation in the middle quarters of 2022, while the number currently is 4.4. Also, by the time the inflation target is reached, the Canada Chartered Bank's prime lending rate is expected to climb to around 3%. In RE/MAX 2022 Canadian Housing Market Outlook, in both Toronto and York region, the 2022 price estimate is up 10%. Let's just say all those predictions are correct. By end of 2022, if you are looking at 10% price gain, 2% inflation, 3% interest rate, and possibly 1% vacancy tax, how would you feel about the investment option? Hey, this is Nick Chu from Sound Team at RE/MAX Hallmark. Don't forget to subscribe to our channel and please leave your comments below to share your thoughts on Toronto real estate.